Fiscal year 18 GDP advance estimate is at 6.5%. Remember, these are not good numbers at all. We grew at 7.1% in the last fiscal. For fiscal year 18, that number is at 6.5%. And obviously, back of the envelope calculations do tell you that there is no way we could have grown at 8% for the second half of this year for us to reach at 7%. 6.5%, so sub 7% is right. This is median of 6 and 7. It's at 6.5%. Dr. Virmani, let me throw this to you now. 6.5%. Obviously, GST has been the big disruptor. We do believe GST has to be a reality. But let me hear from you. 6.5%, is that encouraging at all? Do you believe we will now pick up from here? Or do you believe these numbers are nothing to write home about? Let's hear from you.
Well, it's clearly right at the bottom of my original estimate, which was 7.5 plus minus 1%. Though I had narrowed the band subsequently, so I've been proved wrong. But you're quite right. I think if I go into the details, which we'll get later, but going by the quarter, the last quarter information, the GFCF had picked up better than one had expected. It was above the trend, but consumption was below the trend, and that has probably been affected further in the second half by the problems of the GST, and we can discuss that when the numbers come up. The third aspect, the net export minus import, had also reverted to normal, but the investment and the external side together have probably not been enough to overcome the weakness on the private consumption side, which clearly is linked to the fact that the simplification which was undertaken by the Finance Ministry has not been sufficient to pull that up. But of course, the exact numbers will come out and we can discuss that further.
We will, because right now what we're picking up is that GVA is going to be at 6.1%, GDP at 6.5%. Agriculture growth for this entire fiscal year is being estimated at 2.1%. Extremely measly there. I think there's enough and more that has been said about farm crisis. 2.1% versus 4.9% growth that we had seen in the previous financial year. I'll take a quick word from Maithili before I move across to Subodip and Anandarayanan. And Maithili, 6.5% for GDP, 6.1% GVA, and farm growth numbers that I just have right now is at 2.1%.
Well, yes, Supriya, this is very much in line with what I had said in response to your first question. But nonetheless, I was hoping against hope that I would be proved wrong, because these are very unhappy numbers, very unsatisfactory numbers, particularly if you look at what the fiscal deficit, if you're going to work out 3.2% of a much lower GDP, then actually what you have in terms of fiscal deficit that is possible for the government comes to a much lower figure, which means that in fact the government has overshot its fiscal deficit number for November, not just by 112%. It's just not, the fiscal deficit figure for November was actually much higher, perhaps close to 120% of the budget estimate, and that is certainly dismal reading.
No, I get your point, and I get your anguish that 112% is perhaps the figure in reality is a lot higher. Let me take this across to Subodip, and Subodip, 6.5% for GDP, 6.1% for GVA, 2.1% for the farm growth. Those are numbers that I have just now. Public admin services growth estimated at 9.4% versus 11.3%. Again, a number that I'm quoting from as far as this release is concerned. This is certainly not good news, is it?
Well, I think everybody was expecting the growth rate to be much lower, but I think it's.
Hear you? We can hear you, Subodip. Can you hear us? Okay, I don't think Subodip is.
Yeah,
I'll take it across. Okay, Subodip, if you can hear me, just go ahead quickly.
Okay. Okay, so as I was saying that the growth part was always expected to be weak. The growth number 6.1 is actually much lower than what we were expecting, around 40 bips lower. We were looking at the GVA number at around 6.5, which is being reported at 6.1%. So disappointment, I think, if I'm not mistaken, has come from one, the agricultural bit, and second is, I think, the manufacturing portion.
Very, very dismal
So I
at
think
4.6%.
it's not a surprise. Yes, it's not a it's not a surprise, but it definitely shows that the structural or the fundamental drivers of the economy are not really at its best. So there's a lot of work to do that you have in terms of the investment, in terms of the overall the private sector investment cycle and all that needs to be done. And I think this is just a example of or the data that we see today is something that is kind of shows what needs to be done.
You know what, I'm going to just take out the internals, and if my office can follow me on this, manufacturing growth is at levels of 4.6% versus 7.9% in the previous year. Mining and quarrying is at 2.9%, that has picked up. Construction, and that is the activity that's picking up, and I think we need to spend some amount of time there because this is an indicator of economic activity, is at 3.6% versus 1.7%. We're also seeing financial services pick up substantially, 7.3% versus 5.7%. But I think the biggest indicator of them all has to be private sector fixed capital formation. And if you look at the GFCF figures, the gross fixed capital formation, at current prices, it is estimated at 26.4% versus 27.1%, and at constant prices, it's at 29% versus 29.5%. So I think the biggest elephant in the room is private sector investment, and that has, forget about picking up, gone down, and that should be a reason to worry. But a lot of it could be on account of the disruptive reforms like the GST, the IBC, some of those reforms that will have long-term benefits.